I don't think it says anything about the consumer, David. I think it's company specific. I mean, on the other side of that coin, you look at a Nike that's been on fire. Lululemon continues to go higher. You mentioned TJX. That made an all-time high, 21 times forward earnings. I don't think that's ridiculously expensive. Home Depot, they have blamed strategic initiatives, but you know what? Comps missed, revenue missed. That stock looks like it wants to trade back down to the August low, which is 200. So although I would love to say it's an indictment of the consumer, I don't think it is.
I think also there are some winners. I mean, you talk about Nike. That's obviously a very big player, but we had names like Ralph Lauren doing well. To me, the Kohl's was really the most interesting. I mean, Home Depot was priced for perfection or near perfection, and so it was only it's off 5%, and you sort of re-rate the multiple a little bit as well as the earnings being a little light. Kohl's was priced for mediocrity and missed by a fair margin. And it was hard to really get excited about some of the things that they say they're excited about. And now it trades at under 10 times earnings. I mean, and it doesn't it's cheap, but it really should be cheap.
Well, David, you asked, or the question posed is there something wrong with the consumer if you look at a Kohl's and if you look at a Walmart? And the answer is absolutely not. I mean, think about, we had some housing numbers this morning reinforcing. We all know where the job market is. We know where wages are in the 3 to 4% growth. So with Kohl's, I think you get back to a case where, again, the big box stores, that's a ridiculously competitive environment. We're overstored. I mean, Walmart is finally going back to beating everybody on price. There's no margins here. The only place that they're getting growth is in terms of their grocery business, and that's not a way to get excited. So Kohl's was the loser of this bunch at one point till it started to outperform, and I think you're going back to relative performance and relative value, where I think Kohl's stays behind those two.
Certain point, though, valuations do matter, and I don't listen. One thing I say all the time, I don't know, David, if you agree with this, but never underestimate the U.S. consumers want to spend. It doesn't mean they should be spending. So I don't want to confuse health with their want to spend. I think they're two entirely different things. I mean, I think the consumer's as strapped as they've been in the last 10 years. I think consumer debt to GDP is probably north of 50%. That's unhealthy. And if you ever get a downturn in the market, they will stop spending on a dime like we saw last October, November when the market went down 20%. But in the absence of that, valuations matter. And we've talked about Costco for a while. Carter Braxton Worth, you might be familiar with his work. He's on the Parthenon of the charting business. You might be, anyway.
You might be very confused when you hear about the Parthenon.
But at any rate, back in April, he talked about Costco and the move higher, and that's exactly what's happened. But into earnings in December, Costco now at 32 times forward numbers. I mean, that's getting way ahead of its skis, I think.
Yeah.